depending on how high it goes and how fast, you can have massive drawdowns. But if it's climbing up and to the right over time, all of these things in between are bear markets. Okay? These are all bear markets. It's not like there's never going to be volatility again. Just like if you zoom out, this is what Bitcoin has done over the long term as well. Look at this bear market. What was it? It was a higher low. So for somebody who has a low time preference and focuses on the long term, this was just yet another higher low for Bitcoin on the monthly chart. It never even broke the monthly structure or anywhere back near the COVID lows. This was a higher low. And each successive new higher low that Bitcoin makes, outside of some kind of major catastrophe which causes it to go down significantly, is going to be higher lows. Because there's a constant supply, fixed supply I should say, because we know that, it's coded in. Bitcoin cannot have any more printing, there's no inflation beyond the issuance that comes from the halving cycle. And there is demand. We have demand from the ETFs, we have demand coming in from countries, and we have real talks of strategic reserve assets. We have real talks about Bitcoin having a real place in the global, macro world. It's already there. It's already there. This is not theory anymore. This is not a hypothesis. This is actually real. Bitcoin has a place. It's the 7th largest asset on planet Earth. It's just behind Google, right? It moved up into 7th. It passed Saudi Aramco this week. Bitcoin is not a scam. It's not a Ponzi. It's not a fraud. You can't have all of that happening for 14 years consecutively and still call it that. It is just what it is. It is a new generation of asset, and it is going to continue doing that until such times as there is some major sign of reversal or failure. And there has been no sign of that at all throughout its entire existence if you're focusing on the higher time frame view. And it goes up and to the right over time, just like all the other biggest assets in the world go up and to the right over time. So, focusing on that, super cycle is not what people think it means. People think that super cycle means that it goes 100x and then crashes. That's not a super cycle. That is a blow off top euphoric bubble. That's a bubble. A bubble and a super cycle are not the same thing. A super cycle has many bear markets, many drawdowns. It also has, and this is the important part about always staying exposed to Bitcoin. If you're going to follow this logic, right, and you don't think that I'm completely crazy, and you think that all the smartest people in the world who are saying this now, with the everyone from Michael Saylor, Larry Fink, and fucking, everything in between, Paul Tudor Jones, and so on and so on and so on, Stanley Druckenmiller, many of the greatest investors that have ever existed are all saying this. The thing about having exposure to Bitcoin is that you are not trying to time it perfectly. It won't always follow 4-year cycles. It will always do something slightly different. And the vast majority of these moves, right, let's just take it from 2014 on or 2017 onwards, that is 7 months. 7 months provided the vast majority of the price appreciation in that cycle. Above all-time high again. So if you bought at the end of that, right, if you tried to overplay it, you'd have had to wait 4 years or 3.5 years. And then you would have had 5 months that brought the rest of that price appreciation. And now we're kicking into the next cycle. So in terms of actually growing from all-time high to the next, wherever the all-time high is, previous all-time high to the next all-time high, Bitcoin tends to do its price appreciation in shorter spaces of time, not dissimilar to gold, which again has done something very, very similar in the past, even throughout the 2000s. You have a 8-month period of price going up, followed by 15 months of price going sideways or down, followed by a 6-month period of price going up, followed by a 19-month period of price going sideways, followed by, again, then you start to see some upwards movement for 23 months, followed by a multi-year, in fact, nearly a decade, of a sideways bearish market. So the key takeaway from this is that being exposed, this is what they say, that time in the market beats timing the market. And you are also learning how to time the market through your trading, but you have to complement that along with your long-term approach. So your focus is long-term and your shorter term is for trying to maximize returns, trading it in both directions, but not with all of your net worth. Don't try and short the entire thing on the whole bear market. Don't look at it and say, oh, but I've only got 10 grand, so I need to put it all into this or all into that. You do not. You need to focus on the long-term growth, adding to it, and using your trading skills to maximize the periods where the market is going into one of these 5, 6, 8 month upwards phases like we might be seeing right now, because we've done the typical all-time high breakout. That's where you try and maximize returns. You try and take profit on anything you're trading. You get it back into Bitcoin or into cash, depending on the phase of the cycle, and then you go and rinse and repeat. So long-term compounding, that is the game. I've showed you with the calculator how it works. The reason it works is because most people do not have the patience or the foresight to actually do it. People are not good long-term planners, and they don't think about 10 years because they're like, in 10 years, I don't want to be rich in 10 years. I want to be rich now. No, you want to be rich in 10 years. You say you want to be rich now, but if you were rich in the next year and broke 10 years from now, how would you feel? Because that's the reality for many. There's no shortage of examples of people who've gotten rich in a short space of time. Think lottery winners, think people who caught crypto pumps in the last bull market, NFT mania, people who had a business that blew up really fast, made loads of money, and then they lost it all. What comes fast goes fast. So it's actually going to be way worse to make a bunch of money in a year and then lose it all and have to be 10 years later broke, because you can't repeat that. It's like saying, right? It's like a lottery winner who wins the lottery, makes $5 million, blows it all, and then thinks, well, I'm just going to win the lottery again. No, you're not. Because that's not a plan. That's not a skill. That's not a process. That's not repeatable. So behave the way that rich people behave, which is buy assets, don't sell them. Allow them to compound, keep growing it. And then use whatever it is, your business, your work, and your trading to accumulate more assets so they keep growing. This is the game. This is the secret. There's not even a secret, but most people just ignore it because they have a high time preference. Don't focus on how much you have now, right? This is the point of don't just look at it and say, oh, I've only got 10K now, so it could only grow to 137. No, you've got 10K now and you're going to keep working and stacking cash and reinvesting it. You're going to trade to make money and you're going to take those profits and reinvest them. You're trying to grow it. Become obsessed with compounding. That is all. Be obsessed with compounding. Don't be obsessed with flashy cars or designer clothes or fancy fucking holidays or bottles in the club. All that shit can come later. You see Tate doing all this, but he's the first person to tell you that he only did it when he was making loads of money and getting really rich and was a millionaire already. And yes, he would spend a lot of money even when he didn't have much money, but he was always out earning his spending capacity. So if you're not going to be out earning it by making 6 figures a month, and you know that maybe you will get there, but in the next 4 or 5 years you're going to be building up to that, then don't overspend what you make. The goal is to make more money than you spend and invest the rest. That is not being stingy or grifty. That is being super smart. You're not storing it under the mattress, like I said. You're not avoiding drinking coffee at Starbucks. You drink at home. That's bullshit. Those are low leverage. People who say, I'm not going to drink a $4 Starbucks. I'm going to drink a coffee at home. That's the stupidest way to get rich. What you should be doing is you should be looking at the bigger things and cutting costs on those. Like, you don't need a 50 grand car when a 5 grand car is the exact same thing. It's just not as nice. Those are the type of things that have a far higher leverage than just cutting out your coffee every day and making yourself miserable. If you like going to the fucking coffee shop to get a coffee to get out of the house, go and do it. But don't overspend on the things that can be replaced by something cheaper. You don't need to live in a 5 grand a month apartment whenever you could move to a different part of town and live in one that is 2 grand a month. You can have the 5 grand a month apartment in the future, but for now what you need is a roof over your head. So keep the essentials. As long as there's a roof over your head, as long as you have a car with wheels and a fucking engine and a roof, you're not going around like Fred Flintstone, you're going to be okay. All the other stuff will come later, and it's going to be so much sweeter when you're super fantastically wealthy and you've earned it. You don't need to make as much as you think to get rich. This is the number one psyop. You don't need to make 10x per year. You can make 10x in a year on certain periods of certain markets, like a bull market, but you cannot make it every year, year over year, because if you did that, you would be a trillionaire, literally. Okay, so if you actually made 900% a year, which is 10x per year, every year for 10 years with no added investment, you would turn 10K into $100 trillion. Okay? So just this basic calculation, and I think it's even higher than that. I think this broke the calculator. It broke the calculator because it's so unrealistic. You do not need to, nor should you, nor can you, 10x every year, year over year. You can make 10x in 1 year, but if it happens, you should realize that can't happen again and again and again and again and again. And this is why people go broke, because they get rich with some lucky pump and they think that they can repeat those lucky pumps over and over and over again. If you manage to get a lot of money in this bull market, you must realize it into cash, into Bitcoin, get it out, take the profit, and then do not try and repeat it right away. This is why the 4-year cycle happens, but in between the 4th year, which is the best year, you have 3 years of down, sideways, chop, leverage liquidations, and all the shit in between where people lose all the gains. You can make money easily in crypto, but making it and keeping it is the secret. That should be USD. Focus on stacking more Bitcoin, not US dollars. Now, this is a very, very important thing. If, and this is all an assumption, if you believe that Bitcoin is a better long-term asset than the S&P 500 for the next 10 years, right? So if you're not choosing to invest in the S&P at 9%, if you think that Bitcoin's going to go up more than that, then your primary focus should not be stacking dollars or pounds or euros. It should be stacking Bitcoin, even in bearish markets and bullish markets. Again, you have to have a low time preference. Yes, there's going to be periods where Bitcoin goes down 20, 30, 40, 50%. Yes, your trading skills are going to help you to avoid a lot of that. But do not become a USD maxi. Anyone who's a USD maxi is going to go broke over time. Or they're going to have to make so much money, right? They're going to have to out-earn the inflation rate just to keep pace. So despite the fact that Bitcoin will have volatility along the way, it's also coming with massive returns on the upside. And when you zoom out and you realize that those returns come in a short space of time, 6 months at a time, 7 months at a time, followed by a lot of chop, your main thing is to have exposure and understand that over any 4-year time frame, Bitcoin beats everything. Over any 4-year period, Bitcoin out-returns everything. So despite the fact that you can have a bad year in the market, or you can have a sideways choppy year in the market, it will always outperform over the long term. Don't make the most common mistakes. Right. Drill this into your brain. Tattoo it on your forehead if you need to. Do not get leverage liquidated. Do not allow short-term thinking to cloud your long-term positions. This is super important because actually the most common way for somebody to lose all their money in crypto is they make money by buying coins. So they go long in a bull market, they buy stuff, it goes up a lot, they make a lot of money, then the market stops going up. So if you're used to, as people will, over the next year, you're going to see this. You're going to see people get drunk on the fumes of a bull market. They're going to get used to the fact that they can just buy coins, no leverage, just buy spot, buy meme coins, buy altcoins, buy whatever, and it goes up a lot. And they see their portfolio double or triple, or they see a coin go 10x or 50x or 100x. And then, of course, that's going to end because nothing can go on forever, right? Market cycles are cycles for a reason. And then when it eventually ends, their dopamine receptors are fried and they're so used to the instant gratification of making a lot of money really fast that they try and replace the 10x pumps with leverage because the market will not pump 10x in a bear market. It will only go down or sideways. And when it's going down or sideways, you will have the bright idea that, oh, what I'm going to do instead is I'm going to go short with leverage, or I'm just going to go short in general, or I'm going to long the bounces. But instead of using, there's going to be a 50% bounce on this coin, but I'm going to use 10x leverage, so it's a 5x. All of that kind of stuff is a recipe for disaster. not all, but most of the people I know who have made money in crypto and then lost it, have lost it through leverage and have lost it through short-term thinking. Many of you on this call will know this as well. It's probably happened to some of you. If you've been around in crypto for multiple years or multiple cycles and you don't have all the money you want to have, I know why it happened. It's not because you held the coins down, it's because you got liquidated. It's because you got liquidated at some point, or you gambled it, leverage traded, and you lost a bunch of it. That's how it goes. So if that's the number one way to lose it all, if you take nothing else away from this, just focus on not letting that happen. And this doesn't mean you don't trade. This doesn't mean you don't use leverage smartly, in a smart way. It means 80%, 20%, right? Whatever the proportion is going to be, if you have a short-term approach, your high time preference approach, which you're trying to play shorter term moves, that is with a percentage of your portfolio, not the core. Do not fuck with the core, because the core is the thing that's going to make you a millionaire in 10 years or less. It can make you a millionaire in well less than 10 years. That's talking about a 10K starting portfolio. If you have more than that, and if you stack more, and if you make $1,000 a month or $5,000 a month or $3,000 a month, or you make a lot of money from your job or business, this can all go exponentially higher. And you must increase your focus in bear markets, sorry. Increase it, don't decrease it. Be honest with yourself. How many of you were here in June, July, August? How many of you were here and active in November 2022? In December 2022? In May, June, July and August of 2023? When things were down, not pumping. When things were bearish, not bullish. When things felt depression, disbelief, or anger, or panic, not belief, thrill, and euphoria. You must increase your focus in the bear markets because that's where you make the most money. Not by trying to short it, not by trying to leverage trade it, not by trying to overplay it. By saying, wait a minute, where's everyone gone? Right? Why is the campus quiet? Why is Twitter so quiet? Why is nobody talking about Bitcoin on the news? Why is everything all doomer and bearish? Oh, wait a minute. Isn't this the time that I should be buying with a long-term approach? Isn't this the bull market, future bull market, cheap coins that everyone talks about? Isn't this the buying that I look back on in 2 years and think, holy shit, I bought the bottom? Yes, it is. So you actually increase your focus.